Okay, fancy pants, you think you know everything about Roth IRAs? Well, here in the next few minutes, we're going to be talking about Roth IRAs. We're going to help people who are brand new into the Roth IRA world, all the way to the people who, well, think they know everything about Roth IRAs. They're going to learn some strategies that are probably going to put some pennies in their pocket, hopefully even more than pennies, but probably dollars in their pocket that people just really didn't know about or really didn't care to learn about. Now they're going to be learning about it because you're listening to this episode. And my name is Kenneth French. I'm with vastsolutionsgroup.com, where we do tax, finance, and artificial intelligence to lower tax liability for entrepreneurs, usually solopreneurs. At the same time, we're also here to do management consulting. We do a number of other things that ultimately help you, the investor. You know, Roth IRAs are an excellent investment vehicle for a lot of folks. A lot of people don't realize it. Contributions are not tax deductible. You don't save money on the way in, but your capital gains, as you would call it, would be tax-free. When you pull the money out, what happens? Tax-free. As long as you live by the IRS rules, tax-free. You don't have to worry about the taxes down the road. Nice, right? Very nice. So let's go into the 7 really most interesting elements of Roth IRAs. Number 1, you can use a Roth IRA to buy a house. A lot of people don't know that, but yep, you can. You can take up to $10,000 of your earnings from your Roth IRA to put towards your home. The only catch is that you have to be a first-time home buyer. You know, you need to be aware of how much it might cost you in the long term to take money out of your Roth IRA. But generally speaking, it can really help your retirement. Now, what about number 2? Not everyone can get an IRA. There are income limits and people simply don't qualify. The numbers can change from year to year, so you got to really think about it. But look at the IRS tables and see if you do qualify. What about number 3? Dividends are free from taxes. That's a huge element. Dividends are free from taxes. Dividends on investments in your Roth IRA, they're not taxed generally. This might seem, well, like not a big deal, but if you own a lot of dividend-paying stocks, because more and more people are getting into that, well, the amount can really add up over the decades. You know, number 4, you can contribute this year and claim it being contributed to last year as long as you haven't done your taxes. Anytime before tax day, you know, usually April 15th, depending on the circumstances, you can make a contribution and claim it for last year. By the way, even if you do an extension, same thing. So let's say you've extended to whatever, October, you have until October to make your Roth IRA contribution. This means if you're a little short on funds, let's say last year, you can still make your contributions and have the option of making another contribution this year, basically. You know, if you hurry up and get your taxes done early, that's something to think about, but at the same time, you probably don't want to refile, but you could if you needed to. If that would help you to refile, meaning you haven't done an extension, even after done an extension, you see that you could have put in money, talk to your accountant, maybe that can help you. Number 5, it can outlast you. You know, if you or your spouse happen to die, hopefully not, the 2 accounts can be combined without penalty. Whoever said the government never did anything nice for you, right? Number 6, it's inheritable. Your IRA can be passed to your heirs without any penalty whatsoever. With a little bit of planning, it's a great way to pass money along after your death. Roth IRAs are very probate friendly, but you really need to talk to your financial advisor and or attorney for the specifics there. Even if your spouse doesn't work, there potentially can be an avenue for working with a Roth IRA. Many people believe that you have to be working to contribute to a Roth IRA, but it's truly not true. Contribute to your spouse's retirement as well as your own. It's beneficial to your both. Now I'm going to throw out another thing, and this is a big component, a little bonus. People don't realize that you can invest in crypto. Think about that. You can invest in crypto. A lot of people think, I got to do stocks, bonds, can't even do real estate, can't invest in businesses. None of that's true. You can. Right? Now, you got to really talk to someone who understands the specifics. This crypto can go up, it could go down, you can lose it all, etc. But yes, it is a viable investment in Roth IRAs. Generally, Roth IRAs are excellent investment vehicles if your income is within the limit. The ability to avoid paying taxes on earnings will make high-income friends drool, right? They wish they could do that, right? A Roth IRA has several interesting features that really can enhance one's investment portfolio. You know, if you have any questions about Roth IRAs, you need some little bit of help, you can contact us at vastsolutionsgroup.com. Once again, my name is Kenneth French. I'm the one who's lucky enough to do these presentations, these episodes for vastsolutionsgroup.com. It's been a pleasure. Hopefully it's helped you to understand a little bit more about Roth IRAs.